Evening traders, hope everyone's well. It's been a good couple of days trading actually. If you're a trend follower, there's definitely some market moving up, and yeah, look, it's trending nicely, isn't it? I think it's probably a little bit overdone short term. What I'm worried about mostly is the dollar yen Jenny. So the dollar yen is broken up above the resistance, and it's more cheeky than the pound yen. And if reversal is going to come, it's going to come from hitting stops in the dollar yen, then pulling back down and finding ourselves tomorrow underneath 112. If that's the scenario, it makes it a little bit harder to buy that dip on any of the pairs. And if you're not in already, then it's hard to buy the dip on these pairs. But you know, euro yen's right up against resistance now. Pound yen's still going on its merry way, but it's you know, it could easily pull back 200 pips and still be part of an uptrend, right? It's not that hard. So yeah, look, I'm a trend follower of parts, but I do like to have some sort of pullback. Yeah, I do like to get some dips at least. Get some risk reward on my trades if I'm not already long. That being said, you know, yeah, no, you can buy. It's just be careful. Yeah, I mean you're coming up against overbought signals, and it's not today, not tomorrow, not tonight, but Thursday and Friday is two huge events that can reverse the market easily 100 points in the dollar yen. So I'm sticking with the euro and the pound long. Both are performing well. Pound's getting a big boost after its magnificent PMI. Also, the eurozone has some really good PMIs as well. So that's helping the euro yen, pound yen also rally with the dollar yen. It's always good when everything lines up together. Really helps the speed of which these pairs rally. And you know, there's it makes me happy to be long the major because I don't trust the dollar, right? So the US dollar sells off because of Yellen wants to come across dovish and take June off the table. She can do that at the statement on Thursday morning, and it's and that's a real possibility because the market's priced in 65% that they're going to raise. So any sort of doubt on that will have a bigger effect than if they confirm it. I don't know. I really think that they're trying to improve their communication in the recent rate hikes. So they're going to the market's going to make a prediction based upon that statement, I do believe. And so I think there will be a lot more movement than maybe some analysts are expecting. US dollar movement. I'm favoring US dollar weakness and a cautious approach from the Fed, and due to uncertainty regarding fiscal policy still. And if that's the case, then Trump's fiscal policy. If that's the case, then euro should do really well. So should pound. In that scenario, the Fed could help the euro get past 110, tested at least, and the pound get past 130, tested at least. And it makes dollar yen a bit harder to play, but definitely still be some buying on dips going on that pair, regardless of the Fed, because the stocks are so strong and risk is on, and the euro yen pound yen want to rally, so dollar yen probably just wouldn't rally as well. And US yields are strong, so it depends on the US yields reactions to how she delays it, if she does. I will talk more about that tomorrow though. It's not the main thing we're going to be talking about tonight. I just want to quickly just check how the market's moving. I haven't checked it in the last half hour. So pound's up, dollar yen. Yeah, this is not. I mean, if this was the first time higher, yeah, right. But this is not the first time higher. You got to look at the 4 hour to find out the real sort of story behind the dollar yen, and it is a big downward trend channel, right? So you just like, oh yeah, what's going to happen now? Well, I didn't see that fall. So that fall was surprising to me, and so definitely this fall was surprising. So the market rolling over is always a possibility, and it could easily happen soon. That's 60 pips left in that sort of trend channel there. So yeah, let's be careful here in the dollar yen. Let's be careful. Put on your cautious hats. Put on your skeptic hat. That's the best way to play it. Euro is giving us no reason to be skeptical about its rally. It's just, look at that. Even though this is stable, it's trying, it's building up. Top side really looks like it's going to go. So I'm really happy with the euro remaining long on that. I don't see any chance of the election causing concern either. It's just going to go as smoothly, and the market's just going to be, yields going to start ticking higher. Let's have a look at some yields actually, because they're in play. They're definitely in play. So the ones you want to look at for the euro strength is the German 2-year yield. Okay, German 2-year yield. So this one it moves around a fair bit, and it's a good one for tracking if it's sort of like a fundamental move going on here. Nothing crazy. Okay, but if you line up this daily with this daily, they should look very similar. That's that period there. Rally, pull back. They're losing control of the yields. Talked it down. Then post-French election. Now, where have we come from? Right, really, sort of a lot of room there to move, right? This is ultra low negative yields on these German bonds, so there's so much room to move up, and it's probably only higher from here. I doubt they're going to expand QE. I doubt they're going to cut interest rates again. So this is probably the bottom, right? And if that's the bottom, that as these start to rally, so they're negative now. So going higher is actually less negative, so minus 0.5 sort of thing. If it gets back to zero, you're talking euro 120, 115 at least, and that's probably going to happen later this year, maybe early next year. But it can, sometimes it speeds up quicker than the market's expecting, and if they lose control of it, then it's not like they're going to do more QE, right? If things are going well. Now, why should we be excited about the euro? We just had PMIs from the Europe come out strongest. What was it? Strongest Eurozone manufacturing is expanded at the fastest pace in 6 years. So the PMI came out for Europe at 56.7. Germans at 58.2. So these are solid PMIs. Yeah, and it's you really want to be, part of that, right? I mean, it's how can they keep on sort of talking down the economy, ECB, or saying, what did Draghi say? Oh, we're in no rush. We're in no rush. If things go worse, we can even expand QE. I mean, that no one's going to believe that, right? The market's going to push their hand, and we'll get to see that option if we do break 110. We'll see how strong it wants to be. But euro yen's a combination of the euro yen and dollar yen, so it's really the best way to play it. We talked about the euro yen a lot. If it can break above this resistance, this is multi-year resistance downtrend. If it can break above 123, it opens up 132. That's really easy to get to, on this particular pair. 115 on dollar yen and 115 on the euro. Those are not crazy levels in a rally on the euro. So yeah, look, I'll be happy to be long the euro now, and definitely happy to be long the euro Monday if Macron wins. I think the market's going to be hard to be pushing it down, and I like the euro because I think it can rally even while the Fed's raising rates, because that's priced in. It's all about what's priced in, what's not priced in. The surprise so far this year has been the strength of the eurozone economy, strength of the UK economy too. UK came in super strong too on its PMIs. RBA came out today in Australia. This was a non-event. We traded this reluctantly today. It had a short squeeze after some nice bottoming. So the Aussie's been struggling, with the Chinese iron ore prices, and it's fallen down a couple of weeks last week, and Made some nice little candles here that suggested that the bottom was in at 74.50. I still suspect we're going to sell rallies. It might go a little bit higher. Yeah, it might rise in sympathy if the US, if Yellen's a bit dovish. But I would use any sort of rally like that to sort of get long. We talked yesterday about pound Aussie, right? We wanted a pullback in the pound Aussie towards the previous support, resistance now turned support. Looks like it's actually bouncing along that, and looks like it's a pretty good risk reward there. So if you're not in that trade, Jesus, I don't know if I can buy it. Okay, just a little bit to get ourselves in trouble. You have to use huge stops with pound Aussie because it's not the same. 50 points in the pound Aussie, 100 points in the pound Aussie is like 50 points on the pound. Yeah, that's keep in mind. Right, so what's the danger to this? Brexit headlines. Euro Aussie is probably pretty good too. Yeah, it's coming back up. Alright. Alright. Look, I'll tell you what, I've got enough. I've got enough with the pound Aussie. It's the same trade in many regards. Yeah, how are you guys going? Yeah, you could have just traded half your size with double the stop. I mean, but each pip is actually cheaper in the pound Aussie too. Yeah. So it's not really that big a deal. Not that one. My old competition account. It's doing well. It's double it up in price, but it's not the one I want to look at. There. Alright, so let's have a look at some of the research out there. First off, we'll talk about the yen reversal. See how banks are playing it. Yeah, they're all bloody bulls now, aren't they? That's for sure. Where were they at 108? That's what you got to ask yourself. Alright. Blah blah blah. President Trump. I mean, Trump had nothing to do with that government shutdown deal. They basically made the deal without him. They sidelined him. He couldn't veto it, man. If he vetoes it, there's no the media's going to blame him even more for shutting down the government. Alright, the highlights of the calendar this week: FOMC meeting 1 and NFP Friday. We see no reason for the Fed to alter any of its language and see the event as dollar neutral. Okay, that's I think it's going to be dollar negative, but I'm looking for that, so I suppose I'll see what I want to see. Price action will be key. It might not be as big a deal as we expect, but it wouldn't take much, yeah, to move the market expectations here for June, one way or the other. Looking slightly below consensus NFP at 150, and unremarkable wage growth 2.6. Could see politically induced re-steepening the US curve, which is a positive to like dollar yen. Yeah. Euro to remain supported. Feel the euro is looking for any excuse to rally to 110.60. Alright, so we've seen two sets of CFD's data since the short squeeze after May announced the snap election. Somewhat surprisingly, the data shows only a third of short cable positions built up in March, back in the day, have been covered. Right. Despite news of difficult discussions between May and Juncker, this was over the weekend, we think cable near-term risk lies to the upside. I mean, you have to, given the price action, right? It just shrugged off that weekend news. RBA is sounding quite optimistic. It was really a non-event. I I wouldn't be trying to play Aussie to the long side. Just not worth it. So many other pairs out there which are giving clear signals. It wants to go higher. Alright, this is what caught my attention actually earlier. God, can we just not focus on the Eurozone for a little bit? Alright, I'm just going to watch a little bit of a podcast, but... Okay, let's... It's 46. I don't know anything about Italian elections. Let's have a little...
I'm Fabio Balboni, European economist, and I'm here to talk to you about my latest piece on the upcoming Italian election. Former Prime Minister Matteo Renzi has just won over the weekend the primaries of the Partito Democratico to become the party's leader for the upcoming election. With receding risk from the French election after the first round and no systemic risk for the Eurozone coming from the German election in September, markets are now likely to focus more and more on the Italian election. In our view, there are three main elements to keep in mind here. The first is the timing of the election, the second is how Italy will go to election, and the third is the issue of Euro membership. On the timing of election, Italy ought to have election at the latest by May 2018, and this is our central case. However, there is still a risk we could have election earlier. In fact, the main party backing the current caretaker government by Paolo Gentiloni is Matteo Renzi's Partito Democratico. And over the next 12 months, the caretaker government might have to take some difficult decisions, particularly on fiscal austerity, with Brussels requesting further adjustment for 2018. Therefore, if Brussels will be tough on the required fiscal adjustment, Matteo Renzi might prefer elections earlier rather than having to back possible increases in taxation that might undermine his chances to win the upcoming election. Second, on how Italy goes to election, which in our view is even more important. The five-star movements, the populist Eurosceptic parties at the moment is polling first with around 30% of the votes. And according to polls, Renzi's Partito Democratico would have around 27%. On top of that, Italy has two very close to proportional electoral laws that are likely to exacerbate the existing fragmentation of the political landscape. The Parliament is meant to discuss possible new electoral law over the coming month, but very little progress has been made. And given the very different views among parties on what's the optimal electoral law, we think it's unlikely we will see major changing in the future. This means that in the upcoming parliament there will be many parties and it could be very difficult to form a strong coalition government. And on top of that, Eurosceptic and anti-reform parties could have a blocking minority, making it very hard for any government to undertake any meaningful reforms in the future. Third, Euro membership. Of the four major parties in Italy, only Renzi's Partito Democratico is clearly in favor of Italy's Euro membership. Of the other parties, some are arguing for Italy to leave the Euro, others for a referendum, and other parties are still unclear on the issue. Therefore, this is clear to become one key element of focus for markets for the upcoming Italian election. In our view, there is still not an imminent risk of Italy leaving the Eurozone. For example, according to the Italian constitution, it wouldn't even be possible to have a referendum on Italy's Euro membership. So in our view, The major risk is that a fragmented parliament could lead to a fragile government, a slowdown in reform, and lack of progress on fiscal consolidation. This could mean more market volatility, possibly rising spread, and therefore the risk of reigniting the vicious cycle of more austerity and lower growth that Italy has already experienced at the peak of the Eurozone crisis. Thank you.
Anyone speak Italian? Because I had no idea what that guy was talking about. I mean, I found that very hard to listen to. His accent was sort of ridiculous for me. But you know, the main takeaway from that is it's not soon, and there's a lot of parties who are Eurosceptics, and the main party is Renzi's party. Yeah. So hopefully he does well. Alright, round 2 of French elections, for those who don't know. Second round coming, very likely the Con's going to win, 60 to 40 is current polls. Only issue is potential low turnout for the lefts who didn't vote for him. They have to come out again and vote for him. And could be less people coming to vote for him than expected, and Le Pen's voters are more excited and will turn up, and perhaps it's going to end up being closer than we expect, but I don't think they can cover the distance. Jean-Luc Mélenchon has refused to endorse another candidate, and he'll keep his own vote secret. Okay, nice work. Le Pen is calling for the restoration of the French franc, appreciation of this new currency, implementation of trade tariffs. Oh Jesus, God, why not Le Pen? So 20 point. I think it'd be right. Let's not read into it. But if you're concerned, just take off your Euro trades. I mean, the bounce on Monday might be only 50 points, right? It depends where we are, right? I mean, if the market's above 110 because the Fed's dovish, then it's you'll see gelato. You will see. It's much more riskier, yeah. So if the market's above 110, I think the risk reward of remaining long into the weekend is less. But if the market still hasn't moved much and it's still underneath 110, I'd still like to be long the euro. Trade with a broker with guaranteed stops, if you can find one. Yes. But yeah, no, that's definitely a trade idea. We'll talk about that on Friday. Actually, we'd be trading the NFP live, so after the NFP we can talk about if we can go long and where we're going long. I might even get a dip down if it's a strong NFP. It could be a good opportunity. Alright, let's finish up with some early morning read from Jim Reed over there at Deutsche Bank. So yeah, it's the first one for the week because yesterday was off. Alright, the highlight of the light US session last night was the VIX closing its lowest level since February 16th, 2007. Alright, so it really fell low. At one point it was below 10. It actually did touch an intraday low of 9.9. That's really, really low for the VIX. Suggesting downside risk is not there. No one's buying downside protection. Alright, to put yesterday's closing level in context, we're talking US stocks, right? US stocks, which are really quite calm and at all-time highs. Near all-time highs. the just market's not focused on the downside at all. Alright, so since the inception of the VIX back in 1990, we have only ever seen the index close lower than last night's level on 14 occasions. This suggests that it's not a bad buy, right? You can buy this. If things get worse, then it goes up. You can actually buy the VIX on many platforms. Probably need a proper multi-asset broker there. Another reason to trade with my broker. Okay. But yeah, so it's yeah. I mean, that's really it. You know, basically, this means that there is no negativity priced in at all, and to me, that's dangerous. Yeah, I think that Trump's got a huge amount of volatility in store for us this year, and you know, he hasn't really been tested yet, and I think he won't, you know, shade away from a huge fight at some point, and that's where we really get to see the risk turn off. So that's later down the track, but I think it's going to be much more volatile than it's currently expected. What was talked about a little bit and discounted because people are starting to ignore him is Trump said in an interview with Bloomberg News he's actively considering a breakup of Wall Street banks. You know, that's, you know, sort of weird. Yeah. I mean, if they took it seriously, that's really negative, but since they didn't, you know, we just ignored it. 10 years are back above 2.3, 2.31. And they're looking at some ultra-long bond insurance. I didn't know about that. So this is, if you don't read like all your Wall Street journals, Financial Times, and you just want to get an update every day, this is the best report to read, just in case you miss things in other markets, whether it's options, stocks, or something. You know, FX is not the only thing in the world, that's for sure. Okay, Fed speak on Friday. We hear from Fisher, Williams, and Yellen, as well as a panel debate from Rosengreen, Evans, and Bullard. Interesting. Other important events this week. Tomorrow there's a television debate between Macron and Le Pen. I mean, there's a chance, right, that Macron does really badly in the debate. So you keep an eye on it. Yeah, you will get some. It might be enough to a little bit of a bounce for Macron if he does well, or if Le Pen comes across as crazy. It's another little risk event. That's tomorrow. Obviously, probably tomorrow night in European time. So late US session. Stokes Bay, yeah. I mean, this is the sort of thing, though, right? The market never sees the big sell-off. You know, it's always with the calmness before the storm. It's and it's you know, complacency and really low VIX is not a good combination. You definitely, I'll be worried about the downside. I'm actually looking at getting some euro here. More sit on my hands or wait. I mean, it's not going anywhere quickly, is it? Do I have enough exposure? No, I don't. Alright, let's get some trades going. Let us get some trades going. We've got double euro now, we've got a pound from way back, we've got a pound Aussie. So those are the ones we're going to be holding for the rest of this week. Hopefully we get some gains on it. I've got to keep an eye on the pound Aussie though. I mean, the pound is cheeky, but the Aussie also is, you know, did have a short squeeze, and perhaps it's got more strength left in it. That could create difficulties for us, but so far so good. Nice little top here on the lower high as well, so be a bit of an effort to get back above 75.50, and that would be the concern, right? You could even sell the Aussie dollar here with a tight stop. You've got some pretty good risk reward. Don't take market orders so casually, mate. Hey? I've been looking at that euro for days. And the pound Aussie we looked at yesterday. And that line, it pulled back straight to it. Bounced off it, and the Aussie's rolling over. It's casually because I'm doing it on stream, but it's an idea which makes sense. The pound Aussie is a little outside my comfort zone. But it's fine. I am the back office. All right, guys. Good luck with your trades, and if you have any questions, let me know. Send me a PM if you want me to look at a particular pair. We don't really talk about the CAD a lot. I know that. It's something you want to watch, and also the gold. We don't really look at that. Gold to me is a pretty easy sell here. Same as dollar yen to buy, and we've got a fair bit more room to the downside to go to. I think around 1240 is sort of the level where you might see a little bit more support come in. Alright, so it looks like it's broken there. I don't see any reason for it to go back up before FOMC, so it looks like it should be grinding lower here towards 1250, probably be a little bit below at least. It would be the trade that if I was playing it, but I don't play gold. But a lot of clients ask me about it. It's just, I'm not playing it myself. Alright guys, good luck with your trades. We'll be back tomorrow at the same time.